course, big focus this week on quantitative easing. We saw that package unveiled by the Fed on Wednesday evening, $600 billion. Are we going to see the flows continue to come into emerging markets, do you think?
Yeah, look, I think it's probably no surprise to anyone that the flows that we're seeing, particularly in bond and equity markets, is going into emerging markets and out of developed markets. So I think a significant part of what's driving emerging markets at the moment is this, money is sort of free in the world at the moment if you're borrowing money. And I think investors are deploying that into emerging markets where returns and therefore growth and equity returns are higher.
At what stage do our bonds stop becoming attractive, though, to those foreign inflows? Because we've already seen those yields touching record lows. I think South African investors probably thinking it looks a bit rich at this stage. Do you think we can still keep on attracting that money?
Yeah, it's funny. If you just do the simple maths, South African bonds are probably still quite attractive. If you take 7% bond yield less, 3-4% inflation, you're getting a real yield of 3 or 4%. And the currency is strengthening. So in dollar terms, actually the return on the bond market in South Africa is pretty good. Compare that to the US, where you're getting maybe 2 or 3% and maybe 1% inflation, so sort of a 1 or 2% real yield. What tends to remind investors that that's not such a good trade to buy emerging market bonds and borrow in developed markets is when the currency takes a smack. And so I would think that foreign investors will continue to buy South African bonds until there's some event that happens globally, and who knows what that might be, causes investors to reassess emerging market risk or South Africa's specific risk, and then they'll pull their money out of the South African bond market because they'll fear that they will lose a lot of the return that they've gained by a loss in the currency.
Do you think South African investors are being priced out of our markets at this stage?
It's a good question. I think we're close. I think what we're starting to see is a lot of money this year has moved into the bond market, even by local investors. If you look at the latest stats, it's suggested that that's turned a little bit. So some of the South African domestic fund managers are moving out of bonds. And I think some of the rally we're seeing more recently in the equity market is a move back into the equity market. And the performance, for example, of the property sector is a good example of that. They tend to be traded off against bonds because they're a very high yielding sector. The fantastic performance of the property sector year to date, I think, is some investors are getting concerned about bonds and being overvalued, and therefore they're moving into higher dividend yielding or sort of property yielding stocks.
Of course, I saw stats out for the property sector yesterday. I think there's growth of something like 30% over the past year. Do you think we're also seeing foreign money coming into our property sector as well?
I don't think so yet. I mean, maybe a little bit. But the real story with the foreigners in South Africa has been the bond market. So if you look at the flows into South Africa, the year-to-date flows into equity markets, into emerging markets, is about $50 billion. South Africa's had 2 of that. Okay, so we've had about 4% of flows into emerging equity markets. South Africa has. We're about 7% of the emerging market index, so you can see we're below our index weighting, but it's not a train smash. We've definitely benefited a bit from emerging market flows. The real story, though, is in the bond market, where we've taken about $10 to $15 billion this year. And that's really what's caused yields in South Africa to fall and obviously the currency to strengthen.
Which other emerging markets are attracting some of this carry trade? Of course, we've heard Brazil complaining often about the impact it's having on the real. Would they be the other big beneficiary? Yeah,
Brazilian interest rates are unusually high, actually, for the success that economy is going through. So Brazilian bond rates are actually higher than South African bond rates, despite the fact that economy is doing better than our economy. So I think that's why there's a flood of money going into the Brazilian bond market. But if you look at the equity market, it's really an Asian story predominantly and then a Brazilian story. So actually 60%, remember I said 2% went into South Africa, 60% of the flows into emerging market equities year to date have gone into emerging Asia.
Are we talking there China, Korea?
Pretty much China, yeah, predominantly China. China and a bit of India.
And just on our equities, because we've seen resources playing a bit of catch-up over the past month. I think October we had an 8% rise in the resources index, and that's after really being pretty flat for most of the rest of the year. Do you think we're starting to attract money into other sectors? Because we've talked about retailers before and how they've been attracting foreign money. Do you think it's going a bit more widespread in the equity market?
I think so. I mean, I think commodities typically is what we would call in our space a high beta sector. It tends to do much better if investors are feeling better about the world and better about equities in general, because they're very cyclical as a sector. And I think what we've seen in the last couple of weeks is investors have really started to like equities again. The European investor is back from holidays. The quantitative easing's come through. Some of the macroeconomic stats are looking a bit better, and commodity prices are up a lot. Okay, and some of it's driven by the fact that there's free money out there chasing commodities. So I think that's what we're starting to see. The rand's kind of stabilized. It's not strengthening anymore. And commodity prices are going up. So investors feel now they can sort of take more of the rand component out of those stocks and buy it for the commodity component, which is looking very positive at the moment.
Talk to us about RBPLATS. Of course, this is listing next week. It's a company that you helped to build a book for ahead of that listing. What's that looking like, and what are the prospects for this company as a listed platinum share on the JSE?
No, look, we were very impressed by the amount of demand that came into that transaction. We closed it on Tuesday night, and we had a book that we had 4 times the amount of demand than the shares that we were looking to place.
So lots of disappointed investors.
Lots of disappointed investors, not as much as this one I was telling you earlier, mail.ru, which was 20 times oversubscribed. But it just gives you another sign of confidence. Investors are participating in IPOs. Typically they participate in IPOs when they're more confident about the markets. I think RB Platinum itself is an interesting story. Platinum, very scarce resource, kind of a South African story. Foreign investors like that fact. It's not that easy to get good platinum exposure away from Impala Platinum and Anglo-American Platinum. It's got a very solid resource base, and there's some M&A strategic sort of buyer interest given some of the cautionaries between Impala Platinum just before we IPO'd the company, where they were clearly taking a look.
And that should provide some support to that share.
Absolutely, yeah. So we expect it to trade quite solidly come Monday next week when we'll list the shares on the JSE.